What's going on, my friends? It's been too long. Been too long. Doing so many things, trying to hook people up like a tow truck. Got some new glasses. They reflect really badly. Look at that. All right, let's get into this. When will this bizarro world, real estate market that we're in, when will this subside? Well, the short answer, for those who are just interested in that, you don't want the beef? Okay, I'll give you the appetizer. So this all normalizes when inflation subsides, rates drop. And actually, I predict it'll be more than normalized. I think we're going to go from famine to feast very quickly. And we're going to have a crazy market on our hands. Just a couple things. This is the S&P, by the way. We'll look at this in a second. This is the weekly chart of the S&P. So each one of these candles is 1 week in the S&P. And as you can see, a lot of people say, hey, it's a bear market rally, bear market rally. And that's true. It is true. It's a bear market rally. But we're very close to breaking structure. If the S&P gets up here and breaks this level right here, we will break structure in this downtrend, because you still have, we got higher highs coming out of here, but we haven't crested this one yet. So from a macro perspective, we still have lower highs here, even though on this more micro channel, we've got higher highs and higher lows, and that structure hasn't been broken. So, but it's nearing the point of breaking structure here, which if that happens, the market will probably come down at first, and then we should shoot higher. It's crazy to think that might be what takes place, but that's the way it's setting up. Okay, here's some interesting stuff. This is from CoreLogic. CoreLogic is very trustworthy from a real estate data perspective. And what's really interesting about this, the reason why I want to bring this up is not just to victory lap all the people I've been arguing with about how the market isn't going to crash, at least not based on the information we have as of right now. I'm open to the idea that things could change. I'm open to the idea that things could get worse, that, stuff could happen. And if it does, maybe I'll change my mind. Depends on what the stuff is. But as of right now, there's no reason at all, not a single reason to believe that we will have a real estate market crash. There's not one. I'm going to say, oh, well, there's a recession coming. Recessions don't cause real estate crashes. There was a real estate crash that caused a recession due to insane amounts of fraud that literally cannot happen ever again. But not that there won't be fraud, but fraud on that level was unreal. On top of that, there were other things that will never happen again that added fuel to that fire. So through April, now it's June already, but we just have the data year over year, month over month. So you still have 2%. Now, remember, a year ago, April was the first time where we really started to see rates pick up. At that point, rates were still pretty good. They just started to tick up just a little bit at that time. And people were going, oh, rates are going up, and they were in the 4s. Okay, today we're solidly in the 6s for most products, high 5s for VA, FHA in a good situation. But, rates are much higher now than they were that year ago. Prices still year over year, though, up 2%, and even month over month, up 1.2% nationwide. Okay, I'll put the link in the YouTube description. You can check it out. But it just kind of shows you. And their forecast is actually for month over month to remain pretty steady, but year over year to increase next month even more. So I'm not saying this means that real estate is about to take off on a rocket ship. No, that will happen when rates drop. But what I'm saying is that if you have hog-tied yourself to this idea that real estate's going to crash for whatever reason you're doing that. Hey, real estate market's going to crash. We'll buy later. It'll be better. Hey, real estate market's going to crash. We're not going to get in. Real estate market's going to crash. I'm going to sell houses that I own. I'm just telling you right now, it's the wrong move. Oh, we got the loops still turned on. Rookie stuff here. One-man production. So, when you really look at what's going on, you can see that there are really no signs at all of a real estate crash. Not at all. What a real estate crash needs is lots of units, lots of inventory to hit the market. We have the exact opposite situation right now, which is one of the reasons why you're still seeing year-over-year gains, even though real interest rates have doubled in the past year, almost, practically doubled. So that's what's going on. And this is very interesting stuff, but long story short, real estate crash hasn't happened yet, and I would say is currently not on the radar. Not on the radar. Now, that's for people who just pay attention to ground level, like myself. I'm on the ground level. I work with buyers. I help people buy homes. I see people running scared, and I see the market still going up. If the market can still go up while people are running scared, that's very bullish. Very, very bullish. I've experienced multiple crashes. I know what it looks like. This ain't it. This ain't it. So ground level plus data, that's where my opinion comes from. If you're a crashy, where's yours coming from? A YouTuber who gets paid to get clicks? Conflict there. You might say, well, you're bullish on real estate and you get paid to do loans. True. But I'm also taking the more conservative side. I mean, if you just look at the chart of real estate, which why shouldn't we? Let's do it. Fred U.S. home values. If you just look at the chart of real estate, it's actually, let's see, is that it? It's actually very, very, like, the conservative thing to say is to be bullish on real estate. That is not a controversial stance. That is actually just the most logical stance. This is the average price of home. Oh, no, this is the Case-Shiller home price index. Case-Shiller right here. Look at that. Same thing. Shows you the movement of home values over time. There's only really one time in all of this, if you were able to call it in 2006, and in 2006, people were still so bullish on real estate, they didn't start getting bearish till way down here. That was when foreclosure started, and we had a down period that lasted a while. It lasted a few years, where real estate was just kind of trying to find its place. And then that marked the absolute bottom a few years after that crash. So, if you look at times in the past where you would have been right to be bearish on real estate, there's really only one time in our lifetimes where that's been the case. And it took a crazy soup of fraud and madness to make that happen. And we just have nothing similar to that at all right now. Now, will there be a pullback? Sure. I mean, look right here. We're seeing pullbacks already in some markets. Prices are coming down a little bit, but there's no crash. This is just a deceleration of appreciation caused by higher interest rates. So that's what's going on. And you can also see that right here. Mortgage demand drops. And I keep seeing these articles. Mortgage demand drops. Mortgage demand drops. Mortgage demand drops. That just keeps happening. And at the end of the day, you only need enough buyers to buy the inventory that you have available. So if we don't have a huge amount of inventory, we don't need a huge amount of buyers. And that's why the market has been buoyed. That's why the market has stayed strong, even though there aren't as many buyers. And there's still, in fact, a lot of multiple offers. I have tons of buyers who are trying to buy homes and cannot get in. Mostly VA buyers. I do work mostly with VA. VA is my specialty. I want to hook up our veterans, make sure they get a good deal. Don't pay any junk fees. They get a great wholesale rate. But sometimes when the market's really competitive, VA offers are just not looked at as favorably. It's a shame. It's BS, but it is what it is. So I got a lot of people who are trying to get homes and can't. And some do, of course. They stay the course. They stay after it. Wait till the timing's right. You get the right seller who's a veteran or whatever it is, and boom, you get it. But mortgage demand continues to decline. Applications fell 2% for the week, down 27% from a year ago. So we have 1/4 less buyers. So 1 out of every 4 buyers from a year ago is gone. And yet prices continue to go up. What does that tell you? What does that tell you? That tells you the story of inventory. That tells you the story of demand versus supply right there. A couple of things people have been asking me about, and, hey, what about the bank failures? Doesn't that remind you of back in the day? No. The reason why banks failed in the past is because they were buying absolutely worthless. They were making, securitizing, selling, buying absolutely worthless pieces of paper, mortgage bonds that were absolutely worthless because they weren't Fannie Mae bonds. They weren't Freddie Mac bonds. They were, what's the name of one of the companies from back then? Oh man, I don't want to mess it up, but they were Countrywide. They were Countrywide bonds or whatever. They were buying absolute junk that they thought was AAA paper because the ratings agencies had stamped it AAA. And so they got rug pulled hardcore. They got in way too deep because it was easy money to trade that paper over and over. Everyone just kept passing the hot potato. That's the reason, not because of what happened recently, where it's just really treasury prices. Some of these banks, they bought treasuries thinking, oh, this is the safe move, but then they had liquidity issues and they had to liquidate those things and they took a big loss. We'll explain more about bond pricing in a second here. We're going to talk about millionaires hoarding cash right now. So Treasury Secretary Yellen says she wouldn't be surprised to see more bank consolidation. What does bank consolidation mean? Bank consolidation means bank failures. That's what she's talking about. Wouldn't be surprised to see more bank failures, because consolidation, what that's a fancy word for, is us allowing, instead of saving the small bank, what we do as the government is we sit back and say, hey, JP Morgan, why don't you save them? Didn't they buy Silicon Valley Bank for $1? That's no joke. And they didn't have to, they got to pick and choose. They got to cherry pick which assets they wanted. Just crazy. So this is a way for big banks to use their political influence to grow themselves. And she said she wouldn't be surprised to see more of that. And if she says she wouldn't be surprised to see more of that, then you can almost count on it. So will those be hitting the headlines soon? You betcha. You betcha they will. You're going to see more bank failures. You're going to see more bank consolidations. And it's going to be because of the overall interest rate environment, the bond environment, what's happening with cash. You're seeing that today they've sued. The SEC has sued Binance. They've been going after everybody in the crypto space. They're really trying to take it down. Bitcoin's been pretty relentless. So this is one that sort of ties into that. Millionaires are hoarding cash, betting on higher rates, survey says. Now, when millionaires hoard cash, what do they do with it, though? This is where I want to try to help you understand. Now, some people will just stick it in a CD or a bank savings account because you can get 3 or 4% on that stuff now, and maybe that'll happen. Maybe that's what happened. Maybe that's what will happen. Maybe not, because typically savvy money, when they want to go to cash, they don't stick it in the bank. Number one, because it's only got so much insurance. Number two, if you buy a bond, let's say you buy a bond today that's yielding you 5% and you pay $100 for the coupon, $100 for the coupon rate, and it's yielding you 5%. Well, if the price of those bonds, if millionaires really are going to buy bonds or put cash into bonds, then that would mean that the price would go up and the rates would go down, not the opposite. And if the price goes up, then you have the ability to sell your bond for a profit. Not only were you collecting the yield while you owned it, but you can also sell your primary position for a profit. So instead of selling for 100, which you bought it at, you could be selling for 101 or 102. And that's why typically savvy money, big money, multimillionaires will put their money in bonds. And then if the bond prices keep going down, it's okay, because they can literally hold on to it forever and you're guaranteed to get paid that money as long as there isn't a default. If you're buying treasuries, there should not be a default. If you're buying corporate bonds from like Apple, like you can buy Apple bonds. Apple is sitting on so much money, it's insane, hundreds of billions of dollars. You can buy bonds. You can loan Apple money and they'll pay you interest. I mean, pretty safe as long as Apple doesn't go out of business. So that's what most big money guys, millionaires, will be doing. They will be putting money in bonds, not in the bank. Multiple reasons, but those are the main ones. Okay. So when we talk about, well, they see higher, they're betting on higher rates. If they're betting on higher rates, what does that mean? That means stocks not going up. That means people putting money into savings accounts, general retail investors selling their stocks. They don't want to be liquidity for retail. So they may be getting out of stocks here to put money into, I would bet, bonds, corporate bonds probably, but just it's kind of misleading, right? Betting on higher rates for what? and why. That's an important piece there. So let's see. As far as crash signals are concerned, this is probably the worst news we've seen. If you remember, I said, hey, listen, people aren't even fire selling their boats yet. Why are we talking about a real estate crash? The used car market has been insane. Finally starting to slow down. Finally. That is an insane, crazy run that we have been on. Insane, crazy run. And so what I was saying was basically long before people will fire sale real estate, something they live in, they'll sell their boats, they'll sell their cars, stuff like that. You'll get more inventory on that side. We haven't seen that yet. Just now starting. Mind you, just now starting to soften. This is after people like me who bought it. I bought a used Tesla in 2018, so 2015. Bought it for $38,000. Recently, within the last 6 months, looked it up, could get $54,000 for it. Just drive it to CarMax and they'll give me a check for $54,000. Okay, so we're coming off of a basis where used car values have gone up a lot. So they should come down. Doesn't necessarily mean it's a bad sign, but that's the first sign I've seen that would actually go, okay, that's potentially one of the dominoes, but the prices would need to fall quite a bit just to get back to where we were, like, let's say, pre-COVID. I mean, it's really wild. Home ownership is a great way to build wealth. There's no better way to say it. I know plenty of, it's a nice way to put it, not savvy individuals who are wealthy just because they bought homes. That's it. Didn't have to do anything else. That's why one of the reasons I like it is because you don't have to study technical analysis. You don't have to go to school and learn some discipline. You don't have to be a genius. You don't have to have perfect timing. You don't have to know somebody. You just literally, all you have to do is just pull the trigger. And every time you buy a house, every time you sell a house, you will look back in the future and say, I wish I hadn't sold it. Every time. I wish I hadn't sold. There's only one house I can say, I'm glad I sold it. It was right before the crash. But if I still owned it today, it'd be worth way more than what I paid for it. Probably double. I sold it before the crash. I feel like a genius. And that's why when people say the market's going to crash, I'm always like, yeah, but even if you're right, and this is one of the reasons, my personal experience, I sold a home that I bought for like 170. It's in Missouri. I bought for 170. I sold it for like 200 or something. I think I netted 190 or something like that a year before the crash. And I felt like an idiot for a little while. People told me I was an idiot. Then I felt like a genius when the market crashed. Now, looking back some 20 years later, I go, that house worth 300, 350, easily. So was it really smart for me to sell it? It felt like it. That's why it's so hard to predict the downside in real estate. And if you do, and if you're listening to someone who's telling you this is the top of the market, make sure they're also going to tell you when the bottom is in. Because if you just think this is the top of the market, like I did, when I sold that house, I thought, well, this is it. It's just downhill from here. And it was for a year or two, maybe 3 before we really bottomed truly. And since then, we've been raging. So it's very, very difficult to call. So when people say, well, you're biased bullish because you're in lending. No, I'm ground level. I study this stuff. I sold my house before the crash. I know what to look for. Okay. And I still regret it. Sold that house and I still regret it to this day because in the long run, I was wrong. It was a bad move to sell that house. I just felt like I had to get out of Dodge. It just felt like the right thing to do. And at the end of the day, wrong. Okay, here's what we're going to look at real quick. S&P 500. Okay. All right, let's try to get this as big as we can here. This is the weekly chart. Weekly chart right here. This is the level. If the S&P can break this right here, if it can get above this, which it's inside the channel, it looks like it's headed that way. If it can get in above there, we have a break of structure, which means that, if I were going to completely guess, but just one idea on how this could potentially work is we come up here, break the structure, and then it's going to come back down when that happens, and then it'll really move. So break a structure, retreat. Nearest order block is right here on the weekly side. So maybe retreat to right there in that range somewhere. Come up, break the structure, stay inside the channel, come back to the order block, and then boom. And if that happens, we could see new all-time highs in stocks. Isn't that crazy? Also, obviously, anything can happen. Anything can happen in the financial markets, but we're really close to breaking structure. And that's been a long, hard grind to get it up this high. I do want to make a prediction. Here's a prediction. If we see that Congress ends up passing something that says that members of Congress can no longer trade stocks based on inside information, if that gets passed, I promise you, I don't want to say that. I estimate that will be the top. And I believe that is part of the reason why we are making this march higher, even though for a lot of reasons it doesn't make sense. If you remember, this top over here, what was happening here? The Federal Reserve guys who've been buying and selling stocks on inside information legally, they ended it, and they ended it right at the top. Right at the top. You tell me that's a coincidence. Come on. Get out of here. Of course it's not a coincidence. I think the same thing is going to happen for members of Congress. We'll have the same kind of topping thing going on, maybe even a perfect double top. But I don't know. Anything could happen. My drawing looks weird. It kind of looks like someone's sitting on a thing out on the beach here. Let me draw some arms on this guy. Flying a kite. So anyway, the reality is that anything can happen here, but I just want to kind of let you know I'm paying attention to this stuff. I'm watching the analysis on this. Why does this matter? Well, when stocks are going higher like this, okay, moving higher, and we're clearly in sort of a bullish move, even though it may be the shorter term move and the macro move is still lower, then that's pressure on bonds. That hurts the ability for bonds to go higher. It's damaging for bonds because ideally, this would be the kind of market we're in. That would help bonds go higher because you'd be like, oh, it's really volatile. It's going up. It's going down, mostly down. That would get a lot of money on the sidelines into bonds. When it's grinding higher like this, that gets a lot of money from the sidelines into stocks, not bonds. So it's just, that's the reason why I'm looking at the analysis. I would, if this broke down, let's say, for example, let's say this was it. This was an order block right here, and this just went, that would actually help interest rates and help real estate, believe it or not. So it's a bizarro world. It's hard to make sense of this stuff. I totally get that. I really, really do. And at the end of the day, it is what it is. So all we can do is do our best. I'm just trying to get you, legit, free, real, market level information. All I'm trying to do, if you, someone wants to get a loan quote, it's easy, it's quick, don't need a whole lot of information, I can hook you up. No lender fees, wholesale home loan rates. You know who to call. Call, text me, shoot me an email. I will be here when you need me. Guys, have a great night. Talk soon.